Hey traders and investors, it's Serge Berger here. One of the key themes for 2016 to me continues to be that the deflationary environment will continue to weigh on more risk assets, particularly equities this year. And I think it's a really crucial thing to understand. So I want to make sure everyone understands this as we continue to push into the first quarter of this new year and equities are under pressure. So let me show you a couple of charts that I think are very revealing and very good for perspective. So first of all, this blue line here is the only one to focus on right now. The blue line is the US dollar ETF. So it's an ETF representing the US dollar index, the DXY. And you can see basically since about the middle part of 2014, we've had a strong bull move in the dollar, and I would think that we'll see a continuation move of this year. Again, not so much in the immediate term or even necessarily in the first quarter or second quarter, but sort of throughout this year. And we continue to see higher lows being made and an ultimate push higher this year and maybe in 2017. And that in of itself, at the core, is a very deflationary pressure on risk assets. So if we now take on the next chart, and again, just focus on this red chart. This is the high yield index. So this represents the HYG, which is again the high yield ETF. And you can see here too, we're seeing a lot of selling pressure, if you will, and it's really a deflationary, a reflection of deflationary pressures. If we then go to the next chart, and again, just focus on this one, you can see this is emerging markets. Emerging markets essentially topped out in 2007 all the way, and then as a reaction move topped out in 2011. Really, we've seen a lot of lower highs, and again, deflationary pressures on emerging markets. The inverse of that rise in the dollar, and that's in a very deflationary picture, and I would suspect that ultimately this is going to lead lean into equities as well. If we look at the S&P 500 here, let me quickly get back to that. So you'll see that this is most likely going to follow this path that we've already seen take place and let's look at all three charts here. So that equities will ultimately follow this path that we've seen in emerging markets, high yield, and again the inverse in the dollar. So pretty much as long as we have a dollar bull market intact, I think we can have a deflationary macro trend, which at the end of the day is also going to hurt again U.S. equities. So that's a really crucial thing to understand here as we start to dig deeper into the first quarter of 2016. And again, it's all probably going to translate into more volatility. And again, at the end of the day, pressure and probably lower highs as a theme for US equities. So I hope this makes sense, guys. Please subscribe to my channel and like the video. That's how I move up in the YouTube ranks. And as always, happy trading. I'll see you in the next video.